What is going on, SoFi fans? Welcome back to Financial Journey. So today I want to give you some good updates from today, things that you need to know, what institutions and big money are actually doing behind the scenes, and one very interesting thing that SoFi has been doing about their marketing. I'm very impressed by this, so I'm going to go over all of this fun jazz. Before I do, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. And with that, let's get right to it. Live tickers going at the very bottom, currently up 3.36%, 21.1 million for volume, 3.7 million shares being purchased by institutions on the secondary market. So definitely a very good day for SoFi and its investors. And not only that though, I always like to bring up the dark pool. So institutions have been buying very significantly today. So you can see some fairly big orders, 1.08 million. And again, the common trend is still happening. Like I've been bringing up, after hours, there was one large buy of $3.95 million. So again, take that how you see that. Keep in mind, I'm not a financial advisor. Do your own due diligence at the end of the day. I personally like to decode and see what big money is doing behind the scenes, as should you. Obviously, if you don't find it relevant, then whatever, don't pay attention. But I think given the news that did come out, SoFi is really trying to increase their customer base. As far as signing on a 3-year contract with 𝗪𝗓𝗧𝗛, as far as the whole break up with your bad banking, kind of that whole campaign that they're doing. So I think this is a very good thing. And obviously he does and says everything that needs to be said. But I think if you couple this with that 2% APY that they recently announced on August 11th. And so again, with those two attributes, I think the customer standpoint is going to significantly increase. Despite all the fear that happens in Q2 and rolling over into Q3, I think the Q3 numbers are going to be astronomical. So once again, the customers are going to be increasing. Not only that though, the products. So I think in general, it's going to be a very big thing, and getting big names such as 𝗪𝗓𝗪𝗧𝗛 is a very beneficial thing. So I think that's my own 2 cents on that. And I always like to see, despite the blood in the market, a good company still doing very good marketing. And even if you take a step back even further, even on Twitter, they're really pushing it out on how it's an all-in-one customer satisfaction system, and it's all in one place to get everything you need, whether it be help your parents or help your children. And this is going to translate into a very profitable quarter. That's my own 2 cents on everything. And when it comes to it though, I think Q3 earnings is going to be a very, very pivotal deal, because again, from Q2 earnings, there were several things that was brought up. There was a lot of analysts. I believe there were 7 questions from analysts that asked during that time frame, and they all asked the same kind of common thing. What are you doing to prepare for a recession? So given the circumstances that's been going on in the market lately, if we do have another home run earnings in Q3, I don't think anyone will be able to ignore SoFi at that stage. Because even just to give you a quick update, like I already showed you, institutions absolutely love SoFi, but as do ETFs. So even the last update, I believe it was around 2 weeks ago, I gave you an update on this, which was around 51, if not possibly 50. Even prior to that, it was at 45. So it's still growing. So number of ETFs holding SoFi is always going to be continuously growing, which is a very big deal. And it does work out to be 8.3% of all the ownership for SoFi is held by US ETFs, which is a very big deal. That's my own 2 cents on all of this. Like I said, I personally like to follow what big money is doing, especially on a verge of a massive recession, as what a lot of people are hypothetically saying. Me, on the opposite end, I do not think a recession is going to be coming. I think it's just a lot of fear. And once we do subside as far as the inflation, which most likely we will see that from the data that does come out on the 13th of September. So that's my own 2 cents. I think it's just going to be a matter of time before we do turn back into a nice bull run. But in general though, the broader market is up because largely oil is down, and just technicals. Technicals on a broad market front is very oversold. Even on SoFi's case, stochastic is at 8. That is extremely low. And if you do couple that with RSI, which is at 40, it goes to show and obviously justifies why we're up as much as we are. And momentum, you can tell a number of retail investors are getting in today, so which is a very good sign. On the actual chart, still lower percentile of the Bollinger Band. We will have a nice little bit of resistance that we do have to battle over at around the $6.50 range, but up until that point, I think a lot of good things are coming. And despite all of that though, I just wanted to always talk on Elliott Wave, so I'm just going to pop over to Interactive Brokers and just show you this. Some people find this relevant. I personally don't really like the Elliott Wave. I like my own technical analysis. It gives you a little bit more of a better prediction, whereas the Elliott wave is just a lot of what ifs. So if we do stay hypothetically below the $6.75 range, they are projecting $3.54 to $4.08 in roughly about a 60-day short-term time period. And so with that, just going to quickly pop back over and talk on some short interest. I always like to give that as a good benchmark as well, just to give you a good idea of what the opposite end or other people are thinking. Despite the green day, they are doubling down. So they are increasing 1.48 million shares today, which works out to be 1.19%. Again, it is what it is. Short interest has dropped dramatically for SoFi recently. Cost to borrow is also at 1.56, and that is the average. So in the grand scheme of things, that is a annual interest rate. So even if someone hypothetically does hold their short position for one whole year, they only pay 1.56%. So that's very, very small in the grand scheme of things. So I think the likelihood of a squeeze ever happening for SoFi is basically out the window, but that's my own 2 cents. Let me know your thoughts on that, because I know a lot of people did get into SoFi because there was a stage when we were at roughly about 25% short interest, and the cost to borrow, the price was roughly about 25% as well. So I think there was a good likelihood of a squeeze happening. So again, it is what it is. It might come down in the future, but still, I like to give a good idea of this. Obviously not necessarily assuming it's going to squeeze or anything. And with all that, don't forget to hit that thumbs up and subscribe, and let me know your thoughts on their new marketing campaign with Justin Herbert, whether you think it's going to be beneficial or not. Let me know in the comments below. If you haven't already, hit that thumbs up and subscribe is always greatly appreciated. And with that said, I appreciate you guys watching, and let's all make a lot of money on SoFi.